Last year was an uneventful year for cryptocurrencies, especially at the moment where ripple effects of the FTX crash has found grave expression in the crypto market. Regardless of heart-wrenching situations, some crypto bulls are staying put and hoping for the best, especially in third-generation cryptocurrency, Cardano. Is this trouble going to end anytime soon? Well, the self-proclaimed Bitcoin preacher has an answer for us. The third largest crypto exchange, FTX, crashed after discrepancies were exposed in the holdings of the native tokens. As a result of this, several crypto faithfuls have lost their funds and faith in crypto exchanges. The American billionaire, Michael Saylor, is one of the most famed personalities in the industry, and he recently resigned as the CEO of his company, MicroStrategy. He resigned in August of the previous year and is serving as the executive chairman of the company. While the industry is striving to come to terms with the crash of FTX, Michael Saylor pointed out that there could be a silver lining to the situation. And of course, no matter what the silver lining is, Saylor would definitely speak in favor of his favorite, Bitcoin. In one of the most recent YouTube videos, the MicroStrategy chairman sat down with Daniel Prince, author and host of the Once Bitten pod. The duo spoke about several topics in the video titled The Year in Review 2022. Saylor tweeted in December 2022, "The Year in Review 2022 with @PrinceSolve covers how Bitcoin changed my views of time, risk and property, annual highlights and lowlights, security conflicts at FTX, the ideal model for digital asset regulation, and thoughts on Bitcoin adoption by nation-states." The American billionaire and Prince discussed various issues and how Bitcoin changed the views of time and other aspects. Speaking on the FTX issue, Saylor stated that there has been a stigma connected to revealed third-party transactions. He explained that since Alameda is a related party to FTX and FTT is a related party, Sam Bankman-Fried is the issuer of FTT. He further mentioned that SBF is the owner of Alameda and FTX is the issuer of FTT tokens. According to Saylor, the question every skeptical investor would have is, since the same person controls all three, if it turns out that Alameda has a billion trading loss, will SBF liquidate Alameda to protect the interests of other customers? The other side of the coin is whether SBF won't liquidate Alameda to protect his interests. Saylor added that a disinterested CEO of the crypto bank who is honest would have lent Alameda anywhere between $0 and $10 million, but instead, SBF went ahead to lend billions. From Michael Saylor's perspective, SBF was not an honest CEO, and he mishandled customer funds by moving them between Alameda and FTX. With this same spirit, Michael Saylor spoke about layers of evil and mismanagement behind FTX's collapse, reinforcing his claims about SBF committing securities fraud through FTT and using the asset to gamble away his depositors' money. In this interview, Saylor started by naming what he sees as Bankman-Fried and the crypto industry's forced moral crime as the sin of the altcoinery. Sam and most of the people in the crypto world are always guilty of pumping and promoting unregistered securities. That was obvious to the chair of the SEC and most politicians, he said. The FTT token offered various benefits to users of SBF's exchange, and once a top 25 cryptocurrency, the asset collapsed by over 90% in value during a run on FTX in late 2022, after which its bankruptcy followed. According to the MicroStrategy CEO, Sam Bankman-Fried, use of FTT and other tokens as collateral for taking out loans was particularly diabolical given their relative illiquidity. But traditional banks like Goldman Sachs would refuse to lend money in such risky collateral. While the FTX CEO maintained that he had little knowledge of what happened internally at Alameda Research, it was widely perceived that the trading desk was closely involved in the events leading up to both companies' bankruptcy. Court filings revealed that Alameda was secretly exempted from FTX's auto liquidation mechanism. This was a privilege Michael Saylor referred to as God mode. Saylor contributed to this, stating that VCs investing in FTX had effectively supported an off-share unregulated casino and have never did with that diligence. Sam scrapped billions from unsuspecting investors in Silicon Valley. They should have known better, Saylor noted. If there is anything amusing about this particular situation, it's the fact that how a hero can be turned into a villain within a short time. This was of course the case for Sam Bankman-Fried, who was regarded as the industry's savior merely months ago. He earned his reputation when his company stepped in to provide emergency liquidity for multiple failing firms, including BlockFi and Voyager. At that time, SBF framed his rescue mission as an altruistic attempt to protect the industry rather than to make a game. Saylor alleged that Bankman-Fried intended to protect those companies to prevent them from calling for their money back from Alameda. If I can simply give them $1 billion of equity, take over the company, and not pay the loan back, I can roll the entire fraud forward, he said. Michael Saylor also believed that FTX's extreme low trading fees were employed to lure traders to put assets on the platform, which SBF could conveniently trade with. Nonetheless, the Bitcoin bull has not stopped preaching his message about Bitcoin in even this chaotic situation. He strongly believes that Bitcoin will be a savior and stream with outstanding benefits. From his perspective, the turbulence would eliminate thousands of useless digital assets, while the primary cryptocurrency and a handful of other coins will be the last men standing. In an interview for CNBC, Michael Saylor argued that Bitcoiners were trapped in a dysfunctional relationship with the rest of the crypto ecosystem. He further explained that the FTX collapse came as a result of a lack of transparency. According to him, if a company holds cryptocurrency assets, this should be nobody else's liability. You need to have full transparency to it, and that's what Bitcoin is, and that's what FTT was not, he said. The American billionaire believes the calamity will hasten the implementation of necessary rules in the crypto sector. He expects only a handful of digital assets will cover the regulatory requirements, with Bitcoin being one of them. Bitcoin will be the winner because it is a digital commodity and is the least controversial of everything, he claimed. He said Bitcoin fits the mold for investors who do not trust conventional or crypto banks, as well as those seeking alternative to fiat currencies with tumbling values, and referred to Bitcoin as the world's most powerful computing network. It means you don't have to trust the FTXs of the world. So yeah, I'm a big believer that although crypto in this case may have been the problem, Bitcoin is the solution. And Bankman-Fried may have made a million Bitcoin maximalists with this crash, he said in another interview with Charles Payne. Also, Michael Saylor predicted that the crypto industry will soon transition to an era where leading institutions and big players will enter in Bitcoin's ecosystem and as such skyrocket its development and price. The prolonged bear market was not enough to change his expectations of Bitcoin. Saylor is still confident that Bitcoin's valuation will increase in the years to come. The MicroStrategy CEO maintained that the coin is a much better financial tool than gold in June and predicted that it will sooner or later shoot up to $1 million. He doubled down on those bold predictions in September, attesting that Bitcoin could hit $500,000 in the following decade if it matches the market capitalization of the yellow metal. He believes that the coin might tap a new all-time high sometime in the next 4 years. Since Saylor remains a significant Bitcoin proponent and argues that the disastrous situation with FTX could lead to other investors to gravitate towards the digital currency, Cardano ADA might also get a chance. The network has also displayed a significant level of resilience despite the situation. According to Santiment, Cardano's Key Shark address tier now holds 4 billion ADA, accumulating 331 million more since the FTX implosion. Addresses with 10,000 to 100,000 ADA now hold their largest percentage of supply in 1.5 years, which implies since June of 2021. As a matter of fact, Santiment tweeted, "Key Cardano sharks have now been accumulating steadily since June, and they have taken this level of buying to a new level since the FTX fallout in early November. Addresses holding 10K to 100K ADA have added $83 million worth of coins since November 7th. Not only are large Cardano addresses expanding their bags, but also the number of Cardano wallets has increased by more than 200,000 wallets. According to the recent information given by the Cardano Foundation, the number of wallets has risen to 3.8 million. It was around 3.63 million in early November. At its current price, ADA is down about 92% from its all-time high of $3.10, thus providing a massive discount for sharks and whales to accumulate. The number of minting policies has increased 69% year over year to 66,950, and the number of transactions has reached 56.9 million, up 139% from 2021. If Bitcoin is going to be the crypto savior, Cardano won't be anything less than that. These results should be enough to justify this stance. But of course, what are your thoughts on this? Let us have them in the comments section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.